People, hey, thank you for joining me. This is Ben Leto, and we are day trading the markets using a tool called BOSA. Yep, I invented a tool called BOSA. Find out what it's all about. We are looking at spread trading instruments using NinjaTrader. So it's a very unique approach. I don't know of any other tool out there in Ninja available for spread traders. Yeah, you got it here. Very unique. All right, let's switch over. Okay, here is a chart, guys, of the Euro futures against the Swiss futures. These are the currency futures, 6E and 6S. Now, I'm not going to go into all the details about spread trading unless you really want me to. Feel free to ask me if you like. I'm happy to describe it, but I do have videos that discuss spread trading to some degree. Let's do a recap of what happened yesterday. I was up $300 in some very simple trading. I'm going to back up 6E here. Let's see if it comes in. What happened? I'm losing all my... Let's see if I lost... Okay, where you at? Yeah, there it is. So, here is my trade yesterday. I didn't do so well in the 6E. I actually, let's see, I went long right about this area and I got out right here. I think it was on a move upward. I just lost about 60 bucks. No, no, it was almost a, I gained a little bit. That's what happened. I went out at the target here. So, um, I was up $100 early in the session. I think it was more like right about here. So we bought here, and I bought early. Really, I should have waited until we hit the moving average. So the idea about this approach is to buy on a reversion to the yellow line. Yellow line is the is the moving average, and you're looking to buy after you do some excursion away from the moving average. You're looking for a move back toward that average. So spread trading is about trading correlated instruments as much as you can uh, and then looking for them to get out of sync with one another, and expectation is to come back into sync. So when they move far apart from one another, you want to jump on a trend getting back toward the middle, right? And that's what I did here. I got in a little early, and really there should have been a second entry right here on this move back. So a push down away from this short-term moving average, hit the moving average and go long the spread. I took some heat. This should have been a good entry right here to go long again, and we want to go get out at the moving average. Earlier in the day, really two good setups appeared up here as well. So here we had hit $200 equity against the moving average. Each one of these green lines represents a $100 move in equity. So very small movements. We're not going to risk a lot. That's the whole point. We don't want to risk a lot of money. So when the spread moves from one green line to another green line, that's $100 per spread. Um, so we were $200 away from the average. Going short here was the signal. 6 o'clock in the morning, I wasn't trading. And another move here, we could have gotten back in again, and a move toward the moving average was great. The price did proceed $300 down to here, away from the average. So this whole move would have been about a $300, $500 move. I'm sorry, 200 bucks to the midline, and then $300 below that. But what I did do yesterday, I'm kind of happy about, was here is trades I took in the. Now, this is a spread of the RTY versus the YM. Now, again, a spread trade, guys, is buying one instrument and selling another. Here, we bought the RTY and we sold the YM in unison. So I went long on a big push downward here at about 1220-ish. I went long here and I got out relatively soon. I had pulled in $100 and I was happy with that. Now these lines are a little bit further out. This is a $300 line, $300, $300. So 300, 600, $900 from the moving average. A little different than the currencies. So I went long here, got out with a $100 gain. Went long here on a break above the short-term moving average, which is a 30-period MA, and I got out right here. Prices were having trouble reaching the midline. I got out early, and you can see prices actually did hit the midline right there. So I pulled in 171 out of there, $100 out of here, and all in all, I was up about 300 and some dollars yesterday. So some really good simple trading. Very, very low drawdown. The biggest drawdown I had was in my 6E 6S long. Let's see what that was. I was down about $200. So from my entry point to this low point is about a $200 value move. That's all the drawdown I had. So it was I was very happy with that. Very low drawdown. Okay, now let's take a look at today's action. I was a little late to the party here, guys, but we had two good setups here. One was at the open, a little aggressive for sure, a big aggressive move down to the 100 though, or the midline. 6E just took off at the 8:16, 8:15 time frame. I didn't look at the calendar today. So certainly some news came out. This is where I'd be interested right here. So we went above the MA. We're up $300 above the moving average. And right here, we start closing below the 30 period moving average. That's a great time to short. And we had a good 100 and if you'd gone short there, $125 move would have been yours to take. Um, let's look at the constituent parts. I want to look at each part for this trade. Now, the spread is going long the 6E, going short the 6S. Does it make sense on each constituent component? Right here, right, coming into the open, we were at the bottom of the ATR forecaster. This indicator here is one of my creations as well. It's called ATR forecaster. And we're looking for overbought, oversold on the day. So this is a daily ATR between this upper line and this lower line, and it's projected on today's price movement. So you can see when we're down in this area, we're at the low of the daily range. We're at the just on the outside of the average daily range. So that's a perfect time to think about buying. So this is why we start print green dots. These green dots are parabolic SAR looking to go long. Had you just traded the instrument here, the 6E, you could have done super well, right? With just the ATR forecaster. But we're looking at longs here against the spread. So this is making me think we should have bought the spread at that time. So ideally 630 would have been time to consider buying the 6E. But let's look at the 6S. At 630, which was right here, the 6S was also in an oversold condition, and it would be really hard to determine which one was more oversold than the other. Again, if you're thinking about buying the 6E and selling the 6S, I don't want to be selling the 6S down here. The Swiss is already oversold. The 6E was also oversold. Let's draw the line there for 630. Both of them were strongly oversold. It's a little risky to go long one and short the other with such a huge oversoldness on both of them. Ultimately, it was a smart move to buy at that point. It would have been a good trade right here at 630. Whoops, wait, wrong one. To buy here because the spread did appreciate in value, but it's a speculative move again because both of them, each component was oversold. What you want is a divergence. You want one of them to be oversold and the other one to be overbought or at least neutral. That means the spread is buying one and selling the other has a higher probability of coming together. Um, Let me show you what that looks like. I think a better example was yesterday. Yesterday here, when I traded well, you know what? It wasn't really a great trade yesterday on the 6E 6S. We basically got, I think, about 60 bucks in profit on this trade. Um, Here's the 6S. So we went short at that time. I went short here. Let's see, short here, and I got out here. So we pulled in $75, short from here and covered here. So it's about a $75 move. The 6E yesterday, there is the cover. So the 6E now, I went long here and I went short here for a loss of 62.50. So one of them we gained 75 on the 6S, so it was up about 75 bucks on that short. On the long, I was down 62.50. Okay, so it was only about a $7, $8 gain. And that's what it was. I had opportunity though, folks. I was really thinking about exiting my 6E up here. We were overbought on the 6E. Now this is about 130, 1330. 1330 up here was also a very strong um, overbought condition on my short. So I was deep in the hole on the short. I was way in positive here, $181 in positive in P&L on the long. So you can play this where exit, you can certainly exit any one of the sides or legs of the trade ahead of time. You don't have to exit them all at the same time. You can leg into the spread and you can leg out of the spread if you like. There is plenty of chance here when I was short the 6S, getting out at this point. Let's say I had gotten out here, although there really wasn't a good reason to do it. I remember watching the market right around this area. I saw it climbing, climbing, climbing. Had I gotten out here, of course, we could have secured $156 on the short, still been in the long position. Um, this was at about noon. At noon, I was down here in the 6E and prices were rising. So I could have secured 181 on the 6S and I would have been down just $100 on the 6E, $80. So the net would have been a plus 100. So I was up $100 on the spread at that time. Um, so you can leg in and leg out. That's my point. Boy, that was a long point, guys. Sorry, I hope it wasn't too boring. All right, let's take a look now. How are we going to trade going forward? Right here was the trade, right there, folks. We had just pushed out of $900 oversold right here. Buying right here at that point would have been a great opportunity. Again, we're looking for a move away from the moving average and then a push back to this. So where the red dots and the green dots start printing, that's where we want to take a strong look at that. I want to look for a good push away from the moving average and a retracement back to it. Right now, we're kind of in no man's land, not too excited about it. Let's see if we were to switch this to the ES, let's say, what kind of look do we have on the chart with an ES versus YM? Now you can spread anything you want. You can do gold against silver. You can do metals. Copper against gold is a popular one as well. Not too much difference here in the ESYM trade. Although we are doing about $600 away from the MA. This could be a speculative entry right here, going short at this point. I do like to wait for this moving average to get hit. So if we come down to this MA, we're $300 away from the midline. That would be my target. So this is the ES versus the YM. All right. We're really just kind of hovering around the fast MA here. Not much to see in the 66S. Let me turn on, guys. This was the really showstopper for me too. Great idea. This red and green dotted prediction line here is important. So it looks over the last however many days I have in the chart, and it determines where is this spread, the close price for the spread, been historically in relation to the moving average. So throughout the day, historically, this spread has been below the moving average. You see that? Red dots mean that on average, it's usually down in this area. Well, we're way above here, so there's some historical precedent for this thing to push down. It does come on average a little bit above the MA right here in the future at about 12:30 in the morning, or in the afternoon. Comes down, and then in the end of the day, it looks to rally. I would be really interested if this pattern played out. So at about 115, 120, I'm going to see where the spread is and play it there. Another consideration is if we go short here, we're looking at some strong move or some tendency for this market to be below the EMA. That's a good chance for us to short here with the expectation of getting down to at least the MA. This also would have encouraged me to go short at these levels, knowing that the market tends to be below the 100. I would want to short when it's above the 100 with the expectation of it moving toward the tendency. This is a little beefy spread. Let's flip the script a little and have a peek at the NQ versus the YM. Where does this one land? Let's see what the NQ against the YM. Now this is a something to think about. I'm seeing this V dollar ratio is quite unbalanced. It's 1 NQ versus 2.5 YM. Um, you want to you want to balance these instruments. You don't want to trade, let's say you have a very small moving instrument like the 6E, for instance. It only might range, $300 in equity over the day. Okay, so the range of the movement from the high to low price expressed in value, equity change is, let's say it's $300. Well, the NASDAQ, its equity change is a pretty volatile instrument, is perhaps $1,200, let's say, in equity change. So when you compare one to another, you want to basically try and equalize them when you do a spread trade. So if one of them is 3 times as volatile as the other, right, you want to trade 3 times the small instrument, the non-volatile instrument, against one of the highly volatile instrument. That's what V dollar ratio is. And what this is showing that the NASDAQ, if you trade one NASDAQ, you should probably trade 2.5 YM. Well, we can't trade halves. Um, so you find kind of the lowest common denominator here. You can trade uh, 2 NASDAQ versus 5 YM. If you could pull that off, that's another way to do it, and that's more properly balanced. You double each side of that equation or that ratio. Now that's going to be pretty big. Not many traders want to play at that level, and I completely understand it. Getting a little data problem here. Let's refresh that. So this one I don't think I want to play with just because the weight is so heavily toward the YM, the NQ. The NQ is a big mover compared to the YM, and we don't necessarily want to play in that game. It's just a little too much. Let me give you an example. If we wanted to make these two equal so that their spreading is more equal, I'm going to double the NQ and double the YM numbers. So it's 2 NQ against 5 YM. I'm going to increase my lines here by quite a bit. So now if you were to trade this, you'd be in 7 contracts for every spread trade. So it's 2 NQs versus 5 YM. But how does it look on our spread chart here? So each line is a $3,000 equity change, guys. That's pretty beefy. Pretty beefy. I'm gonna switch this out a little bit. Let's go like half of that. 1,500, 3,000, 45, and then 6. So BOSA Spread Trader has some really cool features for you as a spread trader. You should certainly uh, you won't find in any other platform. I don't know of anyone else who's offering any sort of spread trading capability in NinjaTrader. So this is a one-stop shop for that. Now this is pretty risky, guys. So it's 1,500 bucks per level on the green line. So if you've got a good amount of capital behind you and you can handle the margin requirements, you could trade it. You could trade it. It's a huge win. This is a $3,000 move from this line to the midline. So there, the equity, the profitability is certainly there. How does it look? Let's take a look at the action yesterday. So this is yesterday's. So our entry system would have probably gotten us in right around this area. The spread is below the 100, so the expectation is a little weak. So we're following the expectation. Where low, it is currently expected to be below the MA. It is below the MA as expected. But look at here, guys. So the green dots, we show that eventually this market does tend to come back at about 11:45. It tends to be above the 100. The great expectation. This is the lowest move historically of this spread before it starts its retracement back to the MA. So this gives us some courage to go long here. And it's a big move. If we go long here, this is a $2,100 trade to that target. The heat we took is 1,600 bucks, 1,500 bucks it roughly. So that's not for the faint of heart. You only want to trade it if you've got the drawdown capability. Don't be foolhardy. Nobody needs to get hurt here. All right, is there any other spread you guys want to have a peek at? We also had a good trade right there. We went overbought $3,000 up to here. Selling at that point gets us, $1,500 gain to the midline. One of the things I like to spread against is the heating oil, crude oil market. Oh, this is a massive move. I don't know what happened. This is on the 29th. Shorting here and holding to the target is a $4,000 spread trade. All right, let's go back to, I'm gonna pull up the crude oil first, and we'll spread this against heating oil. Heating oil, let's go 1 to 1 on our ratio. Okay, F2, 300, 450, 600, 750, right? Okay. Okay, so here are some signals on heating oil, crude oil. Now, heating oil is a little bit more volatile, we're seeing here, against crude. So if you wanted to do an equitable trade, you would do, it's not that far off. It's 40% more. So if you doubled the crude contracts, you've got almost 3 contracts against 2. Let's do that. Let's do um, 3 of crude and then 2 of heating oil. And let's see how that equity plays out here. All right. Well, certainly a big mover. These aren't quite as tightly correlated as you want to think. Um, in a perfect situation, I would consider perhaps going long once we start getting green dots printing here. If we do, once we get a good push above some prior structure, if we go long here and exit out there, that's a $300 spread trade. If we go, certainly a big move against outside of correlation is down to here. And that right there is a $700 trade. Correlation isn't as strong here. This big move. There's a nice gap here. If you go along there, you got about another 700. Now, if the markets aren't correlated, you're going to get these long trending periods of the spread, and might be something to be cautious of. You don't want to be caught in a long trend, especially if you're playing this toward a reversion to the mean. Lots of opportunity, though. Lots of opportunity. I've been trading small numbers of spread equities. So, I'm pulling 100 or $200 in a spread trade. So that's good. Um, but that's very conservative. These spreads, much larger, much more uh, on just one spread, you can pull in a lot more money. Of course, this is trading 5 contracts now, 3 contracts of crude versus 2 of heating oil. Mm. But this is the kind of gap you want to see. You want to see a big gap between the moving average and the spread itself going long, right when you start getting ability to getting the green spread dots or the MA dots to print. Anything green is a good time see. Even if we went here, what's our drawdown? $600 drawdown to here with a huge upside. It's an immediate push to 350 in equity, so that's pretty nice. Spread forecast spread dots are here. Since we're so green in this time of day, you would be emboldened to go long here in order to kind of get back to the spread line. Here we start seeing the spread typically tails off during the day, end of the day. And so you wouldn't want to be necessarily buying here. So something to give a little filter, caution. Let's go back in time. Mm. 3. I really don't have this dialed in. 369, 1200. Let's do a spread those out a little. Um, I would have looked at shorting in this area, and that wasn't a good trade. We did end up getting moved out against us. Ultimate drawdown was $700 had we held on, but it did recover down to the midline, so it's about 100 and, 70, $80, $90 there. Another entry point would have been here. Start pushing below that. That's a $500 trade. And a third one would be right here when we broke through it again, 511. So there's a lot of chances to make some money in this spread. Hmm. Let's take a look at copper against silver is interesting. Let's do silver on the long side, and I'm going to take a look at doing gold on the short side. Why is gold trading? Are we trading December, I think? No. What is gold's? Gold is, it is December. Hmm. Oh, duh, I gotta put a space. It's very picky, super picky. You gotta make sure you enter the symbol name correctly. So I'm running a little short on time. How much time have I got? So this is gold, silver, and they're almost equal, 1 to 1. So you can trade in going long, one silver, short, one gold. And this is what you get. Wow, that's actually a pretty good move here. These are big contracts too. Um, let's double this. 6, 12, 18, $2,400. All right. So now this is a big mover, guys. Very big. Hmm. Why am I not getting my little control panel? $600 per band. So 600, 1200, 1800, 2400. Good shorting opportunities here. That's if we'd have gone short here, we're looking at $1,400 in profit against a 460 risk. I would have probably gone, well, that just touched it. We want to see it kind of clear that MA. I mean, ideally, you want to get it below that average to show that it actually broke the back. Okay. Especially since spread history shows us below the 100 and below the MA. This green area gives us courage to go long. This is where we start seeing a gap between the price and the MA, right in there. Here we start seeing a downside gap, so that would have given me courage to go short. Look at this big old move, hairy mover. Right here we start seeing a gap, so right here go short. Nothing but downside on there. Again, we're trading on a reversion to the mean idea. How did we do? Now this is back on the 29th. 9 o'clock, a big gap here. It's very tight, very tight. The spread history is positive. Here's a great trade right there. We get a little gap here in the price, and boom, we're off to the races. Going long right there is a $700 move. This is a little gap, only one deviation away from the band. It could have given you deviation away from the band. You're moving up, $200, $100 or $200 target. The magenta and green dots, guys, are a CCI indicator based on the spread. So, if you're following CCI, it's a pretty simple calculation. Not a sophisticated indicator. But what I was thinking too is once the green dots stop printing, so we're coming out of oversold area on the CCI, that could have been a good long right here. So we stopped printing the green dots, we went long, stopped green dots in this area. I'm still holding the bias of going back toward the midline. Okay, here is that. Now this is on yesterday, the 30th. There are it's a pretty big trending day. The only one that really worked out was this group after doing the third band away. We saw some possibility of going along there. All right, I've got a few minutes left. How is a 6E, 6S? Oh, we had a good spike here. Let's take a look, guys, at Leto channels. Leto channels, one of my favorite indicators. This Leto channels. Again, it's a scientific approach to overbought, oversold. These channel areas, these pinstriped areas, show areas where the market, when it gets into these areas, it stops and it reverses. This is reversal zones. And we went up here where the market is kind of blowing out highs, continuing higher on the MNQ. MYM, we certainly nailed that one right there, going short there, short earlier in the day. This is at about 9 o'clock. We just hit this area, just hit that area. Good shorting opportunities. Heating oil had a good buy setup right in that area. Prediction histo showing a rise in the instrument. That's what we did see for sure. Crude had a really beautiful sell right here. Beautiful buy here. So boom, boom. Bada bing, bada boom. All right, I ran through that really quick. If you guys have questions, I would be honored to chat with you about it. So email me, message me. The store right here is store.sbdtradingcorp.com. You can email me at ben@sbdtradingcorp.com as well, and be happy to chat with you. So I am short of time, guys. It's been a blessing and a pleasure. I just pray that God blesses you. Tune in next time. We're going to do another session tomorrow. All things going well. I might even do an afternoon session. I've got some time today. You've been great. I wish you all the best in your trading. Reach out to me and say hello. God bless. Have a good day.